today I will cover about IFRS 16, which is leasing. Okay, lease. But for today, I only focus on lessor book. Okay, for this video, I only focus on lessor accounting. That means as a lessor. But before that, I will share to you what is who is lessee, who is lessor, and so on, to understand the basic first. So before I gone through the what is lessor accounting, what is the lease first class that you need to know. Okay. So what is lease? What is lease? Okay, I give an example. Mr. A. Okay. And Mr. B. By legally, the machine, I said legally, not by substance. Okay, legally, this is considered a machine. Maybe the Mr. A want to lease the machine. Okay, by legally, the owner is Mr. B. Okay, so Mr. A want to lease the machine. So who is the lessor now? Good. Mr. B will be the lessor. Mr. A will be the lessee. So you must know who you are first before you answer the question, because different person will take a different accounting treatment. Lessor have their own accounting treatment. Lessee as well have their own accounting treatment. Both have a different treatment that you need to do in your accounting books. Okay. So now, just to ask you class, just to make you understand, as I mentioned just now, legally the owner is at Mr. B, right? So initially, when Mr. B bought the machine or do the machine, initially the PPE is at where class? SOFP, Mr. B will be good. The machine, the PPE itself, the machine itself will be at Mr. B, 10,000. However, when Mr. B lease out to a third party, to the lessee, okay, and when you lease out to Mr. A, example, and Mr. A use the machine, ask yourself class, okay, any reward that come from the machine, maybe from the machine you are selling TV, you produce TV and you sell TV, Mr. A sell TV, I repeat, Mr. A sell TV, the reward owns by Mr. A. I give an example, risk as well, Mr. A. Do you realize something here? You can relate to what? Very good. You can relate to conceptual framework. Conceptual framework mentioned you must be faithful representation. Faithful mean what? Good. Substance over form. You record based on substance over form, not legal form. So what I want to say here now class, although legally owned by Mr. B, but based on the definition of asset, okay, I back to the definition of asset, who will recognize the PPE? Sorry, who will recognize the machine class as an asset in their book? Very good. For this is just a basic. I didn't teach you yet. All right, basic understanding. So what I want to say here, this chapter using substance over form. All right, lessor is the owner, but Mr. A used the machine, and Mr. A, when you assess, hold the reward and risk as well. So therefore, Mr. A will recognize it as an asset. So, just now, you have mentioned, initially, before you lease out, you recognize as PPE, right? Now, when you lease out the machine, because you have transferred the reward and the risk as well, Mr. A used the machine. Mr. A entitled the reward. The risk also faced by Mr. A. So automatically, the machine will recognize an asset in lessee book, not lessor. So you have to de-recognize it. Don't worry, I will repeat back later when doing accounting treatment. This just to get understanding. Why have to de-recognize? Because by substance, Yes, by legally, you are the owner, but by substance, you cannot recognize as an asset because it does not meet the definition of asset, which is what? The control of the economic resources. Remember, back to the definition of the asset. So what I want to share here, class, you must understand the view of the conceptual framework. You are recording based on substance over form instead of legal form because you want to have a faithful. Who get the benefit? Who get the risk? Is Mr. A. So Mr. A, lessee book that we recognize an asset. But I mentioned to you in this video, I will not mention to you how lessee to record as an asset. How to record, I will cover to my next video. Today I only focus on lessor. So what I want to share here now, before you start to recognize it, this we are talking about the recognition issue actually. You are talking about the recognition issue. Once you know your recognition, you can know how to measure it after that. The measurement. So do you have to solve this first? You meet the criteria or not? The recognition criteria. Which you might need to access the definition. You need to follow the conceptual framework. Marker like to use conceptual framework in their answer. So to make the understanding here, leasing is about substance over form. Before you recognize, you must assess first the criteria. So now back to the chapter, lessor accounting book. At least you clear who is lessor, who is lessee. Okay, lessor is the owner, but the lessor lease out the machine to another party. Another party using the machine and pay a lease payment to the lessor. Alright, right, rental, but it's not considered rent. This is considered lease payment. Okay, so now back to the topic. This is basic understanding about leasing. We're going through lessee later. Now we focus on the lessor first. So now we are in the lessor accounting books. Under this lessor accounting books, what you need to understand here, class, you got two. You must, as I mentioned to you, what is the issue? Very good. The recognition issue. Should you continue, maintain, recognize as your asset, or you have to de-recognize it? You are talking as a lessor. Remember, no need to think about lessee. If that book is lessor, you talk about lessor only. Okay? So the recognized issue. How I want to know my issue? You have to assess the criteria first. So how I want to know the criteria or not? So I will share to you now. So you must assess either the meet finance lease criteria. I repeat, this is to assess what, class? To know what you have to be recognized. Either you continue recognized as an asset, or you want to de-recognize it because you have leased out. So both lease out, but sometimes when you lease out, if you still maintain the control, if back to the example just now, if you can see, if you have transferred the reward and the risk, that means you have transferred the control as well. So you must assess the control. That is the keyword actually. Okay? Finance lease or operating lease. So what is finance lease, class? What I want to share here, finance lease is a criteria. If they meet criteria of finance lease, this criteria is relate to when control loss, or we can say control transfer. That is considered a finance lease. Because sometimes question does not mention finance lease, sometimes question mention in terms of control. It's the same. Okay, criteria that control transfer, or possible you can say risk and reward transferred to lessee. Who's the lessee? The person that leases your asset. You are lessor now. Remember, lessee is another party. So if you transfer all the risk and reward to the lessee, that we call as a finance lease. So we have 5 criteria in finance lease. I will cover operating lease later. So what is the 5 criteria of finance lease, class? Now I'm going to finance lease first. You have to read the case and you must see either they meet this 5 criteria or not. But remember, I don't want to say it is a 5 criteria only. Okay? I don't want to say it's a 5 criteria only. But you also can assess the control. Finance lease, first you have to assess the control based on conceptual framework. Okay? Or, so how is the control is? Yes, risk and reward transfer. Or, if you meet another 5 criteria. Okay, in your workbook, you can see. First, keyword, good. Transfer ownership. If you in the agreement mentioned, in the lease agreement mentioned, at the end of the lease term period, you can transfer the ownership. That means that is considered finance lease. Transfer ownership of the asset, of the underlying asset. We don't know what type of asset that you lease just now. By end of lease term. Second is what, class? Good. Lessee as an option to purchase. Okay? Which is, you have to assess either they will buy or not. Exercise the option or not. Okay? How we want to know? The question will not tell you this person will buy or not. You must analyze using the price. Okay? The exercise price been offered, how much? Must be lower than the market value. So when you say then lower than the market value, means that high tendency the lessee will buy back. And sorry, not buy back. The lessee has an option. They will use the option to purchase because lower than the market value. If you see the market value is high, lower than the exercise price, that means that is not the lessee will not purchase. So therefore, it is not a finance lease. So lessee has an option to purchase, but high tendency that this lessee will exercise it because of that price is lower than the market value. Okay, because question will not tell you. He will say, and okay, this lessee got an option to purchase, but will not tell you they will purchase or not. So you have to assess it. Remember, class, you have to assess the price as well in your answer. Okay, and you must give a decision either they purchase or not. Next. Okay, the lease term. This is 5 criteria. This is not and. This is all. If you meet another, either one also consider finance lease. Not all, not and. Or. Lease term is a major part of the economic life. So I want to say here, lease term almost the same. Okay, lease term almost the same with the useful life. Number 4, present value. Later I will teach you the term. Present value of the lease payment mean back the lease payment that you pay, because lessee have to pay to you. Lessee has to pay to you every year, annual lease payment, or every month, depends on the question. If the annual lease payment, I mean they have to pay you every year the lease payment because they have to lease your asset. So will be equals to at the inception date, at the initial date. Okay, consider, okay, the lease payment addition amount to at least substantial all. the fair value of the asset. Fair value of the underlying asset. So the simple word I can say here is your present value lease payment just now. Present value lease payment are almost equal to fair value of the asset. That is a basic word lah. This is the full sentence. That is a short sentence. And the asset is a specialized asset. The underlying asset is a specialized asset. Specialized asset that only used for lessee. Okay, it without modification, major modification. That means lessee customize. I want this machine, I want do like this, then lessor meet the requirement, lessor list to them, to the lessee. Once the lease term finish, the asset cannot be leased to another party because that machine can be customized based on the lessee. So therefore, that is considered a specialized asset. So I repeat the criteria. If you transfer the ownership at the end of the lease term, you have an option to purchase and you have to asset it, either the purchase or not. And you can say the lease term almost the same as the useful life, a major part of the economic life, or you can say the present value of the lease payment is substantial all or almost equal to the fair value of the asset, and the asset is a specialized asset that can only use for the lessee. So if you want to use for others, you have to do a major modification. So class, what I want to say here, class, okay, can use it without major, can use it without a major modification. So what I want to say here, this is the 5 criteria as well. So that means besides using this criteria, besides using this finance lease criteria, you also can use conceptual framework criteria. Because certain questions, they will not give this 5 one. 1, 2, 3, 4, 5. Sometimes they give you in terms of conceptual framework. So you also can assess that to know either it is finance lease or not. How you want to know? Make sure the risk and reward transfer as well. Control transfer. That is considered finance lease. Once you know you meet the criteria of finance lease, first you talk about criteria in your answer. Once you talk about the criteria, and you have to map to the question, alright? Once you map to the question, which criteria have been met or not met and so on, so you can go straight to the recognition. Now you can talk about the recognition because you have assessed the criteria. So how I want to know, for finance lease, I'm talking about finance lease first, okay? If you meet the criteria of finance lease, if meet criteria, what you will do, because you have transfer, okay, the control, as mentioned just now, finance lease is transfer control. What you will do, so the first step, you have to de-recognize the PPE. Because you cannot recognize as an asset anymore, because the control has been transferred. De-recognize the PPE. But remember, you have to use the word of substance over form and so on. So maybe on the recognition talk, you have to talk about substances. We are recognizing substance over form, faithful presentation. You can get marks as well in your chapter 1. So first, recognize. Second, de-recognize the PPE. Once you have de-recognized the PPE, what I want to de-recognize the PPE, the carrying amount. You must de-recognize the carrying amount. Carrying amount of the PPE. Maybe the question gives you 5 years you use, another 5 years you lease out to a third party. So you have to calculate the carrying amount of the PPE at that time before you lease out. So you have to de-recognize it. So what I can say here, credit PPE. Because you de-recognize it. So what you have to recognize, class? As I mentioned to you, by substance, you are giving your asset. By substance, you lease out to a third party. You have to recognize the asset and you pass the asset to another party. What you will expect to get, class? Good. You will expect to get the lease payment. The wrong example. The lease term is 10 years. The lease term is 10 years. So, you give an asset to them. I can see by substance, this is considered a receivable. Because you are giving asset to another party, we should have a contractual right to receive something from your lessee. Every year you will receive the annual lease receivable, receive payment from your lessee, because he use the asset, he have to pay you every year. So what I can say about substance, you have to recognize it as a lease receivable under non-current asset if the lease term is more than 1 year. Okay, receivable. You know what is receivable, right? I mean, by substance, you are waiting someone to pay. Just to inform you, because you didn't learn about the lessee book yet, if you recognize as a lease receivable, the another party, the lessee book we recognize as a as a lease liabilities. So we are receivable, another party also lease liabilities. So for our lessor, because we have to recognize the PPE and it's a contractual agreement, lease is a contractual agreement, you are contractual right to receive a lease payment from your lessee. So you can record it as a lease receivable. Okay, NCA, non-current assets. Okay, so once you know you have to recognize lease receivable, so automatically you have to do a measurement here. Your opening balance, your initial, you must know your subsequent for your lease receivable that I will cover under measurement. Or sometimes they didn't call it as a lease receivable. People also sometimes, other company, they use these terms. You also can use this term. Investment in lease also can. It's the same because you still recognize an asset. But I always use lease receivable. That is better. So how I want to get my... Now once you know your recognition, you have to de-recognize the PPE. Okay? When you de-recognize the PPE, starting that date, because you de-recognize the PPE, do you think you have a depreciation here? Good. Will there be no depreciation? You also can mention that. So starting you list out, starting you transfer control, de-recognize the PPE, there will be no depreciation in lessor book. Students like to do like this. Oh, lessor no need depreciation, but lessee they have to calculate. No need. If you are talking about lessor, you talk about lessor only. No depreciation in lessor book. Full stop. No need to talk about in the lessee book and so on. If you want to sell, can, but time factors lah. Alright? So no depreciation in the lessor book. Okay? Now, I want to teach the measurement part. Class, what I teach here is you still meet the criteria first. We are still under meet criteria of finance lease. If not meet criteria, I will teach later. Okay? So now, you have recognized the PPE and recognize what just now? Good. So because you have recognized lease receivable, so this is the formula for initial for your lease receivable. So the initial is present value, remember this word, lease payment, receivable, because you will receive the payment, by the lessor. Class, just to share to you, what is finance lease? high possibility at the end of the lease term, you will transfer the ownership, or at the end of the lease term, there are possibility that this company will purchase the machine, example. So I will share to you, because when you give an option to purchase, that means you are selling something with a market price as well at the end of the lease term. So that is also received. So I will teach you the terms of these two terms. Okay, I will just give you the formula first. Present value of the lease term, lease payment receivable by the lessor, plus present value of unguaranteed residual value accruing to the lessor. If you don't want to write accruing, also no problem, I guess. You just put present value unguaranteed residual value, also can be acceptable, because it's just a calculation. So you will get your opening balance. But before I proceed to subsequent, I want to explain what is present value lease payment receivable, what is unguaranteed residual value. So I give you an understanding first, okay? Before I proceed to the next step, I just share you a story first. Okay, class. Assume that you are doing a 10 years. I want to give you the understanding here now. Okay? 10 years of the PPE. Or, sorry, we can say a machine that you have leased out to a third party. Year 1, year 2, year 3, year 4, year 5. Year 6, year 7, year 8, year 9, and year 10, the last one. So all this, you will receive a 2,000, example. Your lease, the lessee have to pay you. Lease payment received, because you are in lessor book now, lessor book. Okay, 2,000 every year, until year 10. Okay, until year 10, every year you will get 2,000, 2,000, 2,000, 2,000. Okay, class. Just want to share to you. I give you basic understanding first. What is residual value? I want to explain this first. This is not been, no need to explain in the exam, but this is just I just want to recall your knowledge only. Okay, this is for recall knowledge. It's not part of the answer. Recall knowledge before I proceed to the initial. Residual value. I give an example, a scenario now. Example. The machine costs 100 million. Okay, and the useful life is for 5 years. Sorry, 120. I put 120 million, class. 120 million. The useful life is 5 years, and your salvage value, or we can call it as a residual value, will be what? 20 million, example. So, class, can you help me now? What is the carrying amount? Oh my God. We do for 5 years, right? So we draw another, I believe you draw another timeline for 5 years only. 10 years is quite long. If the question 10 years, don't question lah. You follow 10 years lah. This is for my teaching only. Five years, right? 1, 2, 3, 4, 5. Help me, can you calculate what is the carrying amount for year 1 first? BPE, remember, I said to you, we have a depreciation. Good. So, how to find depreciation? This is a unique one. Because before this, you learn your depreciation, cost divided by useful life. Actually, the formula for depreciation, cost minus salvage value divided by useful life. That is a real formula. Because before this, you never see salvage value. 120 minus 20 divided by good 5. Can I know? Good 20,000. 100 divided by 5, 20,000. So this is your depreciation per year. Okay, class. So what is residual value? Is a salvage value as well. So why is that? Okay, now year 1. What is your carrying amount? Very good. 80. No, sorry. 100. Very good. 100. Why 100, class? Because depreciation 20k. Depreciate again 20k. Depreciation. So your carrying amount year 2, 80. Carrying amount for your depreciation for year 3, 60. Depreciation again, your carrying amount 40. And the final year, because the useful life is only for 5 years, after that no depreciation happen. You see, minus 20. Do you realize at the end of the useful life, your carrying amount still have left 20k? That we call it as a residual value. Residual value is a value at the end of the useful life. Sometimes residual value can be 0. But in this case, I give an example, the residual value is 20. Class, at the end of the useful life, the value is 20, right? So if you want to sell the machine, you can sell at how much? Good. That means minimum amount, you still can sell at, the minimum amount, you can still sell at the selling price. If you want to sell at the end of the useful life, you're still able to sell at 20k. Because the value is at 20k at the end of the 5 years. So what I want to see here, class, it means that this we can consider as guaranteed. Because you can guaranteed get residual value. You can get a guaranteed residual value. You will receive this minimum if you're able to sell. Because the amount minimum is 20k left at the useful life. However, they are company at the end of the 5 years the carrying amount is what? 20 years. So that is your guaranteed residual value. You able to sell at 20, your selling price minimum. Plus, they are company, they don't want to sell 20. I think I want to sell at the end of 5 years, I want to try to sell at 25k. I don't know, it's quite small. I give an example, 30k example. I want to sell at 30k. So what I want to say here, class, the 20k is guaranteed. Residual value. The 10k, you are not sure. You still can, the based on the market, you're not sure that the person is able to buy or not. So that we consider as unguaranteed residual value. So this is the term that I want to introduce you. So 20 years, sorry, this is 20k, carrying amount is 20k. So you minimum amount that you're able to sell at 20 because the amount still left at 20. But if you want to sell at 30, can 20k, you can say guaranteed, possible you can sell. But another 10k is considered unguaranteed. So that is the terms of unguaranteed. I want to explain what the meaning of unguaranteed. So unguaranteed come from selling price minus the guaranteed residual value. So we can say this is a selling price that you want to sell minus with the guaranteed residual value. Clear, class? What is residual value, sir? So this is the way to get your residual value. The residual value is the value at the end of your useful life. Done. Now, back to the concept of this. What is present value now of the lease payment? Sometimes you don't know what is the definition of that. So, what is that? Okay, now I lease to another. Okay, just now it's about PPE, useful life. Now this is a lease term. I don't want to make you all confused. The drawing that I draw here now, as you can see here, this is a drawing of useful life, not lease term. Now I want to draw as a lease term. I list out for 5 years as well. Example lah. Year 1, Year 2, Year 3, Year 4, and Year 5. So you have to pay 2,000 to your lessor. We are lessor. We will receive the 2K. Class, just I want to ask you, if you had an option to purchase, you were able to sell at what just now? By minimum amount. Good. 20K just now. Remember the residual value? The guaranteed residual value. Why I list all this? If you realize, I list all the amount that you will receive. You will receive 2K in year 1. Now you are here. Now, you enter to the agreement. You will receive year 1 2K, second 2K, third 2K. You will receive 2K year 4. You will receive 2K because enter to the end, because the lease term is more, maybe at the end of the year you have to pay the 2K. And if you able to sell to the lessee, minimum amount you can get 20K. Receive as well. You still receive. So that we call as a present value lease payment received. That means including the guaranteed as well. Guaranteed, including residual value guaranteed. So because it is a present value, very good. Now you know already. Very good. Now you know already. So you have to discount it because you are doing recognition at the initial. Now. So how? 2K, 1 plus, question will give you the discount factor, -1. 2K, 1 plus I, -2. 2K, 1 plus I, -3. Because discounted, you will receive all this. -4, 2K, 1 plus I, -5. Very good. 20K. Because that is also amount we will receive when you sell the machine. As I mentioned just now, this is finance lease. Finance lease at the end, the ownership, the option to purchase at the end at the lessee. Power of 5. Sorry, -5 as well. So once you get this, the amount, the discount factor for all the amount received, year 1, year 2, year 3, year 4, and year 5, and year 5, and you have to discount it all, including the 20K as well, discounted it. So once you get the amount, that we call as present value lease receivable. Lease payment receivable, including the guaranteed. So that is the way how to get the present value lease receivable payment by lessor. What the lessor will receive. But at the present value, so you have to discount it. So the present value of the lease payment receivable, which is a lease payment that you will receive, plus with the guaranteed value, guaranteed residual value, plus with the unguaranteed residual value, all amount that you will receive. Then you will get your opening balance. Are you all clear? This is the way how to get. But most of the question, just to share to you all class, most of the question, the present value lease payment receivable, as you can see in the yellow color, okay, in this yellow color, been given by the question. That means you don't need to discount it. Sometimes the question will give you ready. Alright? That means you just get the amount. But for the unguaranteed, maybe you have to do discounted lah. Oh yeah, just to share to you, the unguaranteed residual value here, this is also present value, okay? I give an example from the case just now as well. You want to sell at okay, now you want to sell at 30K. Remember just now? So 20K you have discounted into this one, the 20K just now. The another 10K, the unguaranteed, also must be discounted. Don't forget, present value it. 10K 1 plus I power negative 5. Must also discounted it. But no need to put under here, because we have split it into the formula. You put under unguaranteed. That means the 20, if you follow just now, the 2K and the 20K will be at the first row. The second row, discounted only the unguaranteed, which is the 10K just now. Example. So remember, this both is present value. Are you all clear what I'm talking about now? If you are, sometimes the company, they don't want to sell at the residual value. They want to sell more. So the more is unguaranteed. So you have to split it and discounted it as well. So that is a way to get your initial amount, not yet the subsequent. Now we go to the subsequent. What about subsequent? When you talk about the subsequent class, just to share to you, once you get your opening balance, what is the subsequent? The lease receivable. For the PPE itself, no subsequent, because you have de-recognized it, no depreciation, so no need to talk about that anymore. The opening balance that you get from the lease receivable, remember, I want you to put the working. Show from where you get the opening balance. Why? If your opening balance is wrong, but you get the figure from the working, maybe your subsequent will get the full mark back. Own figure rules, we call it. Own figure rules. So, put working with W1, W2. You must put the working as well at the opening balance just now. So, once you get your opening balance, you must plus with your finance income, because you are under receivable, plus, minus lease payment. I don't want you to confuse with the financial instrument. Financial instrument, you have, I repeat back, financial instrument, the finance income using effective interest rate, the cash payment using coupon rate. For the lease payment, no interest rate, no rate. They will give you the amount what you have to pay. How much you have to pay to the lessee. Lessee have to pay the lessor, lessee have to pay to the lessor. How much that you will receive? I can say this is a lease payment receipt. Put receipt. If put lease payment, is a lessee. Or you can put a lease receipt, also can, no issue. Finance income, they will give you the rate. So, it's the same. Percent time opening balance, you will get the amount. Then you will get your ending balance, lease receivable. When you say ending balance, lease receivable, class, this is under your SOFP. Finance income, good. Presentation, good. This is under SOPL. This is under SOFP. Finance income credited to. Class, remember, we have another formula as well. You also can use this formula. The opening balance is the same. From get the working from your initial just now. You will realize something different here. What is the different here, class? Minus lease payment received, because you are lessor now, I repeat. You minus first in dollar. No need to calculate. Equation give you. You get an amount here. Then you will plus with your finance income. So this finance income will not time with your opening balance. The finance income will not time with the finance balance. The finance income, the percentage, will time with the amount after deduct the lease payment received. You still can get the ending balance as well. So how I want to know, class, which I want to use? Either this or this. Very good. I think you know because you have learned before this. You only use this if the lease payment received in arrears. In arrears mean you receive at the end of the year. If you receive the payment from the lessee at the end of the year, so you have to use this formula. Opening balance plus finance income. That means percent. the finance income interest times your opening balance. Then you minus with your lease payment receipt. However, if your lease receive in advance, beginning of the year, so you have to use this formula. Read the question carefully. When you will pay you, the lessee will pay you. If you receive at the beginning of the year, so you must minus first the lease payment received. Once you get the answer, then you can get your finance income. Okay, that is for payment received in advance. This is payment in arrears at the end of the year. So that is the two different formula for the subsequent. Then you can get your ending balance. It's the same. You still put under SOPL, the finance income. This still under SOFP. Although the formula is different. Are you all clear on the lessor accounting books? Under the lessor accounting book class, what I teach you now is if you meet the criteria. What I teach you just now is if you meet the criteria. How about if you not meet? Class, if not meet, that is under operating list. Now I'm teaching you operating list. Operating means not meet criteria finance list. Or you can say what? Conceptual framework. Good. Control not been transferred. One, control not be transferred. Second, risk and reward still maintain at lessor. Please, in exam, please give reason. Give reason plus evidence. What evidence? Why you say risk and reward still at lessor from the case application. Apply to the case. Why you say the reason reward at the lessor? Okay, although you lease a third party, so you still is an operating lease. If an operating lease, because you does not transfer the control, what is the accounting treatment class? Very good. Continue recognize the PPE. Just now, big finance lease, you have to recognize it. But for this case, continue recognize PPE. And what is your subsequent? Very good. Continue depreciation charge. In lessor book, P&L, because you have PPE there, you continue recognize because the reward and risk is still at you, the lessor. Another one, the payment that you receive. You debit cash because you receive payment, the lease payment received from your lessee. Just now, if you realize, I didn't put the lease payment received in SOPL. Okay, the lease payment received, you realize, if finance lease, you put the lease payment received under the subsequent of the lease receivable. But for operating lease, you must credit it as a rental income. I don't want to say rental, this is not considered a rental. If you put rental, no issue as well. You can say a lease income under P&L. Good. Other income. This is for operating lease. I repeat. In the lessor book, operating lease, SOFP only put PPE only. But SOPL, in SOPL, you will put depreciation, SOPL, and also the lease income, the amount that you received just now. But you got another principle here. The lease payment received will be credited, is an income, right? Credited as an income into P&L systematic basis. Continue, P&L systematic basis and accrual basis. Why I say this, class? I give an scenario now. Under this scenario, for operating lease, I give an example. Year 1, you inform to the lessee, this is a lease receive payment. Lease receive payment. Year 1, you mention to the lessee, the scenario mentioned the lease term 3 years. The lease term is 3 years, example. Year 1, no need to, I give you free, no need to pay, example. No need to pay first, we said. I don't want to say free lah. Okay lah, first year you don't need to pay yet. Year 2, 3,000, you will receive 3,000. Year 3, you will receive this is considered cash receipt payment as a lessor. You receive another 6,000. So, what I mean systematic basis here, class, means that in the year 1 first, what is your accounting entries? Do you receive any cash here? Class, just to share to you, systematic basis, that means you must consider the 3 years. Total how much? Total 9,000. 3 plus 6. Divide by 3. That means systematic basis. That means every year in your P&L, will be recognized is 3,000. Okay, year 1, example. If you can see in your year 1, although you didn't receive cash, you still have to recognize in P&L. Very good. Credit income P&L, accrual basis, because you have used the machine. The lessee have used the machine. Service has been rendered. You still have to recognize in P&L. 3,000. Because systematic basis per year. Debit what? This the customer has paid you or not? Sorry, the lessee pay you or not? Not yet, right? Very good. This we call as accrued income. 3,000. Accrual basis, right? Debit accrued income in your year 1. So we see year 1 accrued what? Lease income, right? Accrued lease income 3,000 credit. You debit just now is what? Oh, I'm so sorry. Yeah, you are right. Debit accrued. Debit accrued, credit income, P&L, because of service has been rendered. Although the customer does not yet pay you, you still have to recognize in P&L systematic basis. Okay, when you go to the year 2, this is cash. This is cash. Cash 0. Now you have paid 3,000. So what is the general entries, class? Logically, this is basic actually. I'm very mad if you don't know how to answer this. Debit cash, that is year 1. Debit cash 3,000 because you received the cash 3,000. Correct. Still credit income 3,000 because systematic basis P&L. You will credit what, class? Sorry, no credit. Okay? Means that if you realize this accrued lease income not yet been paid. Okay, this we put under asset because it's an accrued income. Okay, basic principle. Accrued income we put under asset because you are expected to receive something. Okay, when you go to the year 3, you receive how much, class? Very good. The cash is 6,000, right? Just now, remember the I show you 6,000. So debit cash 6,000. P&L still have to record systematically based on service has been rendered. You have to recognize 3,000 at that year 3 particular, and you realize now you have pay extra year because you still accrued waiting for the 3,000 not yet paid. So just now you debit asset, now you can de-recognize it, credit the accrued lease income asset just now. De-recognize it because payment have been made, 3,000. So this is for operating lease. Student make careless mistake. They always think when recognize P&L, they think, oh, year 1, no payment received, so no need to recognize P&L. That is wrong. Because P&L is not a cash basis. P&L is an accrual basis. You recognize once the service has been rendered. So this is the way to calculate for operating lease. I repeat, for operating lease, for the last one, operating lease, you still continue recognize as a PPE. The payment received, as a lease payment received, you must recognize as a credit, debit cash, and you recognize as a P&L. But remember, although you pay extra or you pay lower, you still based on systematic basis. There are lessee that maybe pay more. Maybe at the year 2, I feel I want to pay 5,000, example. So you must know lah, you still have to recognize in the P&L 3,000. Maybe the 2,000 can be what? Prepaid revenue, because you receive in advance, example. So you must play with the accrual basis principle there. If you receive extra, that means you have a liabilities there. If the lessee pay lower, maybe so that we call as accrued income. If the lessee pay extra at the first year, example, maybe that is considered a prepaid revenue as a liabilities. You only discharge, you only de-recognize the liabilities once you have service has been rendered. So what I want to say here, this is just an accrual basis because you are recognizing in P&L. It's a basic understanding as an accounting students, you must know about this accrual basis general entries. Clear? Okay, so alright, if you want, if pay extra, fine, I'll give you another scenario. Scenario 2. Year 1, year 2, year 3. You receive 6,000. 1,000, 2,000 year, 1,000 year. I give you just an example. Alright, so give me an example. Year 1, you will recognize. You know it is a total 9,000 divided by 3. Still, you have to recognize systematically in P&L 3,000. So first year, what you will recognize? Good. Still, credit what class? You do what you know first. Credit other income 3,000 because that is a basic systematic basis mentioned in the essay. So now, you receive cash how much? Good, you receive 6,000 cash. You only recognize other income 3,000. Means that you receive in advance. It's a prepaid revenue. You must recognize as a credit accrued. Sorry, not accrued. You are right. Prepaid. You receive in advance. Prepaid income, liabilities. Another 3,000. Year 2. pay 2,000. Fine, debit cash 2,000. Still credit other income, P&L systematic basis, because you receive the cash receipt. You receive the rental receipt systematic 3,000. Recognize it because service has been rendered. You have used the machine. Another one is what class? Good. Okay, now understand. You own 3,000. You own 3,000 class. Okay, you own 3,000. So you have recognized the 3,000, but they only pay you 2,000 at that year. So now the customer, the lessee, own you now. Accrued income. No. Correct, you're correct. Debit prepaid. Sorry. You must visualize it, class. So you only pay you 2,000 only. So what do? Debit prepaid income, because you have a liabilities here, class. Wait, Other income 3,000. You receive 6,000, so you own the service 3,000. And then they pay you another 2,000. But you only able to do service at 3,000 only. But they give you another 2,000 to you. So now, class, how much is you left your liabilities? So you still own another 1,000, class. Okay, debit prepaid income 1,000. That means you only able to de-recognize 1,000 only. You still got another 2,000 that you own to your lessee. When you go to the year 3, what happened? Debit cash 1,000. Credit other income 3,000. Now you will debit what class? Very good. Now we have done our service, so you can de-recognize all debit prepaid income. This is considered liabilities reduced. This one, reduce 1,000. Debit prepaid income, so you can reduce because completed ready. De-recognize all, discharge. Because we have done all the 3 years. You see, it's the same. It's the same concept. This is for year 3. This is for year 2. So this is you pay extra lah. So anything, any amount that maybe the question gives you pay extra or pay lower, back to the accrual concept basic. What you own or your lessee own or you own. If you own, it's a liabilities. If your lessee own, you recognize as an asset. That's all. Alright? So that's all on operating lease. So class, this is under Lessor accounting book. So I repeat, you must remember, first you must assess the criteria. First, if you follow my setup, who you are first? Lessor or lessee? So if you are lessor, this is the way how to write. Assess the lessor. Is it FL or OL? Don't give answer first. Students like to go, oh, this is FL. Explain. Then, okay, what to explain? The criteria, FL or conceptual framework. To find the control loss just now. Once you assess the criteria, then you say the type of lease, FL or OL. Now you give your answer. This is only assess, applied for the accounting treatment. When I say accounting treatment, good. The recognition is including, when I say recognition, you also can be de-recognized. If you think that at the initial date you need to de-recognize it, so that is also under R. Recognition or de-recognition. Next, measurement, you got your initial, then you have to do your essay on your subsequent. And then you will go to your presentation. 5, you need to have your disclosure. Alright, that's all for today. Thank you.